Hey guys, welcome back to my channel. My name is Dariana, aka Not Her Time, aka your trading bestie.
Where'd you find this?
And today is an important video because I want to talk to you guys about how to create your trading plan. I don't know about y'all, but when I first started, I did not have no trading plan. I did not know what a trading plan was or why I even needed one. And I was just out here like showing up to the market, just trading. I was just trading with no plan. I don't want that to be y'all. I want y'all to be intentional in the live market. I want y'all to be intentional with your journey. And so that's why, I have this little template for y'all and these questions that y'all can ask yourselves so that when you're creating your trading plan taps every category that it needs to tap. You can always change your trading plan if something's not working for you. So yeah, let's look into it. The first question that your trading plan should answer is, what days of the week are you going to be trading? Are you trading Monday through Friday? Are you taking one day off? If you know you have to be at work in the morning at 9, maybe your trading plan shouldn't be, I have to trade New York session Monday through Friday. Just make sure that your days of the week match with your real life schedule. Is second thing that the trading plan should answer: what session are you going to be trading? What time of day are you going to be trading? I know some people kind of just look at the market whenever, and if they see a setup, they're just going to take it whenever, and that's fine. That is literally perfectly fine. If that's part of your plan, that's part of your plan. But if you don't want to do that, I find it very helpful to have a certain time of day that you trade, just so that you're not always on the market. This question is actually very important because it's one of the first barriers that your trading plan is going to place between you and over trading. Because if you know that, okay, I'm done trading at 11 o'clock, don't place any more trades after 11 o'clock. That's why a trading plan is so clutch, because it's trying to help you. Define your time of day. How long do you want to be on the charts? Take that into consideration. Take into consideration your other responsibilities. Also your session. I know me, I like New York session, but only in the morning though. I don't trade afternoon session. You might do better with London session. London session be looking good. It'd be looking good. If you're on the East Coast, know that you have to get up at 3 in the morning. Take that into consideration. Although me, I would love to trade London session, but I already know that I will not be getting up at 3 in the morning. Okay, I've tried it before. I was sleep trading. No. Next, how are you going to risk your capital? So one, you need to ask yourself, am I going to risk my capital with percentages, fixed lots, or maybe a fixed money amount? Whatever is best for you and how you want to compound your account, or if you're taking a challenge, whatever is best for the challenge. And this could change. I know on a personal account, you may be willing to, you might do a fixed money amount or a fixed lot size or something, but maybe on a funded or on a funded challenge, you might want to do percentages. So if you need to come up with, or if you need to tweak your trading plan for the different trading situations, but depending on the account you're trading on, you could definitely do that. How much money are you willing to lose? If you're doing a fixed lot size, you should already know about how many pips your stop loss is usually going to be. Or maybe you have a fixed stop loss, so let's say your stop loss is always 10 pips, then okay, boom, a fixed lot size would be perfect for that. You just gotta make sure you understand and are aware of how much money is really going to be lost. This next question is the next barrier that your trading plan is going to put between you and over trading. So what is your max loss for the day? Let's say if you're willing to lose 5% in a day and you're only your max risk on one trade is 2%, then you can only take a few trades. You can only take 2.5 trades. And this really helps you manage your P&L, because if you know that you're not going to lose more than 3% in a day, that's good. That's good. That helps you maintain and keep your capital for a long time, because our goal isn't only just to make money, but our goal is to, trade tomorrow. So we definitely want to preserve our capital as best that we can. And another question that kind of pairs with that is, how many trades are you going to take in a day? So if you know that your max risk or your max loss for the day is going to be 3%, and you risk 1% per trade, then that means, okay, you could probably take a max of 3 trades. Or if you don't even want to do that, if maybe you want to limit to 2 trades. Just to go over that again, what days of the week are you going to be trading? What session are you going to be trading? Are you going to be trading in a session? What time, if you are? How are you going to risk your capital? Fixed lot size, percentage, or fixed money amount? And What is your max loss for today? How much are you going? What number do you have to lose in order to be done for today? Do you have maybe even a max gain for today? Like maybe you're saying, okay, if I made 3% in the day, I'm done trading. I'm not even going to risk that profit anymore. Ask yourself these questions, because then when you get into situations where you do have to ask yourself like, okay, should I keep trading or should I be done for the day? Should I walk away with this loss, or do I have one more trade in me? Look at your trading plan. What does your trading plan tell you should do? The last basic question that your trading plan should answer is, what is your minimum risk to reward? So like, what's your first TP? Is it going to be 1-to-1? Maybe your minimum is going to be a 1-to-2, 1-to-3. Like, it just depends on your trading plan, but it's always good to have that defined so that you can identify, 1, am I being greedy right now? 2, how far do my trades usually go, and what RR would be best for that, where I could, 1, save my capital, but 2, also maximize my profits as much as I can. Going back, I completely forgot about this. But another one of the basic things that you should have answered in your trading plan is, what pairs are you trading? How can I forget? You gotta know what you're trading. You gotta make sure that you're trading the pairs that you're comfortable with, the ones that align with your trading session or your trading times, or the ones that you just like, you back tested the most and that you feel like you can be the most profitable with. Another thing that I'm trying to implement more of into my trading plan is situational rules. What I was just listing off to y'all, that was kind of like the basic, like, this needs to be answered. We need a answer to these questions. But now we have situational rules where it's kind of like, okay, this isn't going to happen every single day. But when it does happen, this is what you're supposed to do. One situational rule that would be really good is, when do you hold your runners? So for me, one of my rules in my trading plan is, if the market is ranging, I'm only going for a 1-to-1. Like, I'm not even going to try and hold a runner in a ranging market, because that's just not in my trading plan. I'm not doing that. Maybe you only hold runners when you're going away from the 200. Maybe you only go for more when you have a higher time frame confluence. This happens to me all the time, where I'm like, oh my gosh, should I hold a runner? Oh, I don't know. I'm looking at all my confluences, like, is this good enough to hold a runner, or should I just close? Like, all that decision making, that's what be messing me up in the market. So anything that I could put an answer to, or a direct response to, I'm gonna define that. Not even just that, but do you even hold runners? Do you want to, or do you always want to close at 1-to-1? Because you don't have to hold runners. You don't have to go for more if you don't want to. Another situational rule that you can make is, how do you execute your runners? Maybe you're the type of person who, like, when you're holding a runner, do you close some positions? When you're holding a runner, do you move your stop loss to break even? Or do you just leave it alone and let if you're going for a runner, your TP is just going to be, you know, that higher target, and you're just gonna let that get hit. You're not gonna take out anything. You're not gonna move your stop loss to break even. Those are important. One, because it's gonna give you consistent data when you look back at your trades. So you get into these situations where, like, you're looking back at your data, but you're not getting a clear, accurate picture of your trading, because you're doing different things. So just by defining, like, okay, when I'm going for a runner, I'm always moving my stop loss to break even. Or if I am going for a runner, I'm going to take out some profits and, you know, let one position run. Just having that defined can really, really help you guys stay organized when it comes to looking back at your data. But y'all, keep in mind, y'all do not have to define any of these things. If you're good and quick with your decision making, you don't have to have like these super in detail rules, because, you know, sometimes it's like, dang, like, can I breathe? Another situational rule you can add to your trading plan is, what market conditions do you trade in? If you're in a consolidating market, maybe your rule is, I'm not taking a trade in a consolidating market. I'm not trading that. And those are really, really good, because it makes it so much easier when you come to the market and you can just look and be like, okay, I can already see this market's looking trash. Until it starts to look better, that's when I'll start, you know, looking for a setup in that market. But since it looks trash, I don't even gotta look at it. I'm not even gonna analyze it, because I'm not trading that. Another situational rule is, are you allowed to cut your losses? I know a lot of us probably deal with this, and me included. It can be hard to not cut your winners sometimes. So maybe you want to make a rule where it's like, I don't even allow myself to cut losses. You just look at a stop loss get hit. Or maybe you want to cut your losses and you want to get better at that. Define that in your trading plan so that you know. If you find yourself cutting winners too much, your rule should maybe be always let your trade play out. That's your rule. That way if you cut your loss early or you cut a winner, then you broke your plan. But also ask yourself, if you do allow yourself to cut losses, what does the situation got to look like for you to feel comfortable cutting your loss? For me, I gotta be in my trade for at least, cause I'm a scalper, I'll be on the 5 minute. I gotta be in my trade for at least like 15 minutes before I start deciding if I'm gonna cut my loss. I either gotta cut it within the first 5 minutes because it was a fake out, or I gotta let this play out for at least 15 minutes. But I'm not gonna lie, y'all, I'm about to change it to like 20 minutes because I cut a winner today and I was so upset, and I literally waited. I'm like, let me wait at least 15 minutes to let this trade play out. And then the 15 minutes came and I cut it right at the 15 minutes, and then it went back in my favor. I'm like, dang, like I'm tripping. I'm gonna have to get that figured out. Definitely ask yourself, what situations do I want to cut losses in? What do the price action have to look like in order for me to cut my loss? How close does it need to be to my stop loss in order for me to cut my loss? Answer all these questions. These are the market situations that you will find yourself in, that you have to make those quick decisions. You have to make quick decisions because the market is moving. It's not gonna wait for you to, okay, let me just pause while Dariana figures out if she wants to get out this trade or not before I, show her the direction we going in. No, you gotta really make these decisions fast. And another thing that I've been implementing into my trading plan is just things that I'm not allowed to trade, things that I'm always losing on. Like, for a long time, I've been very lenient on what I trade. Like, I just been like trusting myself. Like, okay, I'm just gonna trust you to, choose what you wanna risk on. Like, if you see a setup that may be not the most ideal and you want to take it, well, Dariana, that's on you. Like, I'm going to trust you and trust you to make good decisions. But then clearly I'm not making the good decisions because I keep taking these trades that are losing. So now I'm starting to create these rules for myself where it's like, don't trade this. Don't trade this. Like, kind of like how I was saying in the first rule, like, if the market conditions look like this, I'm not taking a trade. Or if the EMAs look a certain way, I'm not taking a trade. Your trading plan is there to make trading easier for you. So do everything that you can to make it easy. Okay, answer these questions so that you don't have to answer them when you're in the live market. This sun is shining on me so dang hard right now. Like, it's kind of distracting. Anyway, y'all, I'm so sorry. This sun is like really getting on my nerves. So I really hope that this video helps y'all. I hope if y'all have anything to add about your own trading plan, or if you want to tell me your trading plan, like, let me know, because I'm like curious to see like what y'all be trading. Y'all, the sign. Anyway, if no one has told you yet, let me be the one to tell you that someone has faith in you, and that someone is me. With love. Yeah, I'll see you in the next video. Y'all.